Right now, there is a very good chance your bank is quietly taking money from you every single month, and doing it so smoothly you've never even noticed. You're not being scammed in the obvious way. There's no fraud, no stolen card. It's worse, because it's completely legal and it's happening in plain sight. If you keep your savings in a normal account at one of the big, famous banks, they are almost certainly paying you almost nothing to hold your money, while they turn around and use it to make a fortune. And meanwhile, inflation is quietly shrinking what that money can buy. So your cash isn't just sitting still, it's actually going backwards. In the next few minutes I'm going to show you exactly how this quiet robbery works, the simple switch that can legally pay you 10, 20, even 50 times more on the exact same money, with the exact same safety, and the moves to set it up tonight in about 15 minutes. This is the closest thing to free money you will ever find, and most people leave it on the table for their entire lives. Stick with me. Welcome to Money Decoded. So let's expose exactly how the robbery works, because once you see it, you'll be a little angry, and that's good. When you deposit money in a savings account, you are basically lending your money to the bank. They then lend it out to other people for mortgages, car loans, and credit cards, charging them anywhere from 6 to 25% interest. So your money is out there working hard and earning the bank a fortune. And what do they pay you, the person who actually owns that money? At most of the big national banks, the average savings rate is something like 0.01%. That is not a typo. On $10,000, 0.01% pays you about $1 for the entire year. $1. Meanwhile, they might be earning hundreds or thousands off that same money. But here's the part that really stings. Inflation, the general rise in prices, has been running far higher than that. So if your money earns basically zero while prices climb, the real buying power of your savings actually falls every year. You did the responsible thing, you saved, and you're still quietly losing. The system isn't broken. It's working exactly as designed, just not for you. And almost nobody questions it, because of one comfortable myth. The myth that keeps people stuck is the quiet belief that all banks are basically the same, and that the giant, famous bank you grew up with is somehow the safest place for your money. So you stay, out of habit and a vague sense of security, and you never question the pathetic interest. But it's just not true. The interest rate a bank pays is a choice, and different banks make wildly different choices. The big brick-and-mortar banks have expensive buildings on every corner and massive advertising budgets, and they don't need to compete for your savings, so they pay you next to nothing. But there is an entire category of banks that will pay you dramatically more for the exact same deposit, with the exact same government protection. And no, these are not sketchy or risky. Many are online divisions of banks you already know, or fully established institutions that simply don't waste money on thousands of physical branches, and they pass those savings on to you as higher interest. The safety can be identical. The only real difference is that one group has been quietly underpaying you for years, and the other is willing to pay you what your money is actually worth. Let me show you exactly what that switch looks like. The switch is something called a high-yield savings account, and it is not complicated, exotic, or risky. It is a plain savings account, just like the one you have now, except it pays you a real interest rate. While a big bank pays around 0.01%, high-yield savings accounts have recently paid somewhere in the range of 4 to 5%, depending on the wider economy. Let's go back to that $10,000. At the big bank, you earned about $1 for the year. In a high-yield account at, say, 4.5%, that same $10,000 earns you around $450 a year, for doing absolutely nothing different. Same money, same effort, just parked in a smarter place. And here is the key on safety: reputable high-yield savings accounts are FDIC-insured, exactly like your big bank, which means your money is protected by the United States government up to $250,000 per depositor, per bank. So you are not taking on extra risk to earn that higher rate. You are simply refusing to be underpaid. Now, I have to be honest with you about the fine print, because there's a twist people need to understand. Here's the twist, and it's the part that should light a fire under you. This isn't just about 1 year and a few $100s. It's about what that gap does over time, because that interest compounds, just like we've talked about before. Every dollar of interest you earn starts earning its own interest. So the difference between earning basically zero and earning 4 or 5%, year after year, on your emergency fund and your savings, quietly snowballs into thousands of dollars you simply never got, for no reason other than leaving your money in the wrong account. Think about it, if you keep a healthy emergency fund of, say, $20,000 in cash, which is exactly what you should be doing, the difference between the big bank and a high-yield account can be roughly $900 a year, every year, forever. That's a nice dinner every month, or a chunk of a vacation, generated by your money instead of the bank's. But now for the honest caveat, because I will never hype you. High-yield rates are variable, meaning they rise and fall with the economy, so that 4 or 5% could drop if rates fall. And this account is for your cash and short-term savings, your emergency fund, not for long-term wealth building, because over decades, investing in the market has historically grown money far faster. This is about not getting robbed on the cash you're already holding. So let's set it up right. So here's the first move, and it's genuinely easy. You open a high-yield savings account and you move your cash savings into it. Start by comparing a few reputable options, look at their current rate, confirm the letters FDIC in black and white so you know it's government insured, and check that there are no monthly fees and no minimum balance traps. Many of the best ones are online banks with strong reputations, and opening an account usually takes about 10 to 15 minutes on your phone. You'll link it to your existing checking account, which is a standard, secure process, and then you simply transfer your savings and your emergency fund over. Your everyday checking account can stay right where it is for paying bills and daily spending, that part doesn't need to change. This is specifically about the money that's just sitting there, your savings and your emergency fund, the cash that should be earning its keep instead of feeding the bank. The moment that transfer lands, your money goes from earning you basically nothing to earning you real interest, automatically, every single month, with the same safety it had before. But there's a second step that makes sure this money keeps growing and never gets quietly drained away. The second move is what turns this from a one-time win into a lasting habit. You automate your deposits, and then you leave the account alone. Set up a small automatic transfer from your checking into your high-yield savings every payday, even $25 or $50 to start. Because it's automatic, your savings grow in the background without you ever having to feel it or decide on it, and the higher interest quietly compounds on a balance that keeps rising. Here's the psychological trick that makes it work. Keeping this money at a separate bank from your checking is actually a feature, not a bug. Because it's slightly out of sight and takes a day or two to transfer back, you're far less likely to rate it for an impulse purchase. It creates just enough friction to protect you from yourself, while your emergency fund sits there safe, liquid, and finally earning a fair rate. And remember the honest boundary from before, this is your safety and short-term money. Once your emergency fund is fully funded and earning in here, any extra long-term money you're saving for retirement or big future goals belongs in investments, not in savings, because that's where real growth happens over decades. So let's turn all of this into action, tonight. Let's make this real with 3 moves you can do tonight, in about 15 minutes. First, look up your current savings rate. Log into your bank, find the interest rate on your savings account, and actually read it. For most people at a big bank, seeing that 0.01% in black and white is the wake-up call that makes everything else easy. Second, compare a few high-yield savings accounts. Look for a strong current rate, the FDIC-insured label, no monthly fees, and no minimum balance requirement. Pick one reputable option. You don't need the absolute highest rate, you just need to escape the near zero one you have now. Third, open it and move your emergency fund and savings over, then set up one small automatic transfer for every payday. That's it. You don't have to overthink which account is perfect. The difference between the best high-yield account and a good one is tiny. The difference between any high-yield account and your big bank is enormous. Just make the switch. Do these 3 things and you give yourself a permanent, automatic raise on money you already have. Let me leave you with the mindset shift that this is really about, because it's bigger than one account. Every single dollar you own has a job. It can either sit around being lazy, quietly losing value to inflation while a big bank profits off it, or it can be put to work, earning for you, around the clock, with no extra effort on your part. The wealthy understand this instinctively, they never let money sit idle and underpaid. It's not that they have secret accounts you can't access. This exact high-yield account is available to you, tonight, with the money you already have. The only thing standing between most people and hundreds or thousands of extra dollars a year is a 15-minute switch they keep putting off. Don't be that person. Refusing to be underpaid on your own savings isn't greedy, it's just paying attention, and paying attention is what separates people who slowly build wealth from people who wonder where it all went. Make your money work as hard as you do. And once your emergency fund is sitting safely in a high-yield account, earning its keep, there's one thing you need to get right about that fund itself. So let's bring it home. Your big bank has probably been paying you almost nothing while using your money to get rich, and inflation has been quietly eating what's left. The fix is simple and it's not risky. Move your cash savings and your emergency fund into a high-yield savings account that's FDIC-insured, pays a real rate, and puts hundreds of dollars a year back in your pocket for the same money and the same safety. Then automate it and leave it alone. Pick one move from this video and do it tonight. Just one. Check your current rate, or compare a couple of high-yield accounts, or open one and move your money. That's how you stop the quiet robbery. Now, this account is the perfect home for your emergency fund, but how much cash should actually be in that fund in the first place? Too little and you're exposed, too much and you're missing out on growth. I break down exactly how much you really need in another video, and it's the perfect next watch. Go see that one now. Subscribe to Money Decoded USA. Real money help for everyday Americans, no hype. I'll see you in the next one.